Hi, welcome everyone to another episode of Let's Talk Special Economic Zones. I'm your host, Ainsley Brown. Today's episode, we're going to discuss sovereign wealth funds and outward bound foreign direct investment. Sometimes this can be a little bit challenging or a little bit controversial, particularly around outward bound investments, particularly if you're from the developing world. You will see that as, why is it that you're not investing domestically? Why are you investing overseas? But there are some advantages that can give, and particularly when used in investing in zones. And this is one of those trends that is growing, particularly for sovereign wealth funds, but it can also be for other types of funds like pension funds and so forth that are investing in um, infrastructure and capital assets. Um, One of the best examples of this happening with special economic zones is with Singapore in China in Suzhou. That's a very good example, and then later replicated and modified based on lessons learned in Tianjin, and I think then further expanded in Chongqing. Um, but the sovereign wealth funds or monies from the state or countries that do have them, they're looking to, they've acquired funds, whether it be like Norway, for example, from its oil revenues, and it has these funds, it then looks to invest. Now, this is a very positive thing, particularly for citizens, and if it's managed well, because it's a source of revenue for governments. And typically, governments, the main source of revenue for governments is taxation. So that is one less or less tax burden on the taxpayers because the government doesn't have to look local to get the revenues it needs. It invests and then gets the revenues. So in terms of special economic zones, we're seeing a growing trend. Japan, for example, is doing this. We see them in Bangladesh as an example. But as I said before, the most, I guess, famous example or example that worked really well was Singapore in China in Tianjin. No, sorry, Suzhou, and then later Tianjin. Suzhou was their first experiment, if you will. And then Tianjin was intended to be eco-industrial farm, or I mean not farm, but the eco-industrial special economic zone. They um, developed it on marginal lands and focused on environmentally based industries and so forth. So this is going to be a trend that we have to watch out for. And also, you're seeing where even quote unquote developing countries, poorer countries, are now looking to develop their own sovereign wealth funds or have developed their own sovereign wealth funds and have found revenue sources where they've put monies from that into the sovereign wealth fund with the view to invest overseas and elsewhere, locally and overseas, so that that becomes another source of revenue rather than having to tax their citizens. But again, it's not just about, and this is where the controversy can come sometimes, it's not just about the sovereign wealth funds or the government. It can also be the private sector. And they particularly, it could be banks, but also pension funds. They typically, they invest in infrastructure, airports and in public-private partnerships, running of hospitals and bridges and roads, toll roads. So why not a zone? Zones are, can become a source of revenue. You build out a zone, and there is, occupants that occupy and pay rents every month, and that can be programmed, and you can look at it and project when or what the source is or what the income streams will be and total revenues over a period of years and so forth. So that can happen, and increasingly you're seeing that, and it's being focused on zones in particular because again, and this is where either depending on the zone model being followed by the country, where it is very government centric, where the government is seeking to divest or find a concessionaire to come in and acquire the zone and operate the zone. Uh, People are doing that, either other sovereign wealth funds, which are government based, or other types of funds, which are private sector based. And then the great news, or ought to be great news, is that those profits ought to be repatriated back home. So, from a government standpoint, that is another source of revenue for the government, saving the domestic taxpayer from having to find that through further taxes. For the private sector, then that ought to be a source of revenue for the government because that should be taxed or ought to be taxed, in order to add to the overall well-being of the country. Uh, so those are some trends, important trends that are happening in the special economic zone. I expect or suspect that those will even go further in the coming years. So if you like this episode, please like and share. Comment down below if you want me to do another episode on something or going a little bit more in depth. Just leave a comment down below and I'll get right back to you.